All right, it's Monday, March 27th. This is an end of the day SPY recap, and today we end up with a two up red bar, meaning we made a new high relative to yesterday, but we closed red to the low end of the range. And this now sets up an actionable signal back to the downside. First of all, if you look at the two up bar that happened on a gap up, we never took out that target, which should have developed today. We should have broadened, these two bars should have broadened out to that bar, and we never made it up there. And now if we get a two down bar tomorrow, meaning a new lower low, we, all of a sudden have a target down to here on a failure to the upside. On the weekly chart, that possibly gets us down to a two down week unfolding. And if we can get that two down week unfolding, that takes our target for the week all the way down here to the lows of the month. But that's a whole bunch of chain reaction steps that have to take place. We'll see if it even begins to unfold tomorrow. In terms of today's price action, this is kind of the 5-minute chart near the opening. If you just look at the day itself. Well, first, if we look at the 15-minute chart, this was kind of the structure on the day. Opened up here, never really followed through higher, went down in two pushes, had a little rally, and closed a little lower. Now, I could see on the 5-minute chart, if you were watching it with that, first of all, you have an up bias all day, just according to just the pure rules. You're above the midpoint of the prior day, you're gapping up. A lot of times when you gap up, I've discussed many times, tricky to get momentum continuation, but you never know. A lot of times it pulls back into the gap before it heads up. You get kind of a red to greenish kind of move. So in this case, I could see on the 5-minute chart, first bar here, second bar went down. Then that 15-minute bar was closing up near the high. So I could see if you wanted to try along here, see if you can get above that pre-market high and follow through higher on the 15-minute bars. You could have given that a shot. First bar kind of failed. It reached its target, that pre-market high. Then you can see here it's beginning to fail. It came up. It obviously opened here and then started up again for the second time and started down. So you can almost sense after 10 minutes you weren't getting that immediate follow through. So I would call that like a small loss if you decided to play that here. And on the 15-minute chart, that's trying to play that breakout of bar number one. Midpoint of that first bar is usually my stop. So it would have to be the very small loss. Now, at that point, you don't know if you're just pausing here, ready to start up again, re-enter long. As it turns out, you kind of came down. And you could have, at that point, if you just wanted to have a trade to take, you would have been going short here because the breakout of the first opening range was going to be to the downside. And you could have said, all right, I'll play a pullback into that gap and kind of see where it goes. That would be the only option at that point. You had no real, or you just out and you're just doing nothing with a very small loss. But if you played that to the short side, which it became pretty clear that it was going to try lower, and then you just could watch it. If in 15 minutes it doesn't follow through, you get right out. But in this case, we had the one push down, pause, second push down. And then when you have two pushes down, let me turn this back to a 15-minute chart. When you have two pushes down in an overall uptrend, meaning, you're still way above the midpoint of the prior day, that's a point where you can kind of expect a bounce. So, yeah, and you can see here, you reach the target, the pre-market lows. Note the way you reach the pre-market highs here. That was target one on that up move. Then you reach the pre-market lows in two waves. So if you really wanted to, again, be somewhat aggressive, you could have gotten long in here expecting some kind of bounce. When I get long in this kind of a move, midday, after two pushes down in an overall potential uptrend, I'm not really looking to take out that high anymore. Sometimes I play that for just a little bounce up into you can see the fair value gap in here, so you might have played a little bounce. And then by the end of the day, it reached, what I call the close of yesterday, which is yesterday's action, including after market hours. That's where usually, that's another target I look for a lot. If you're going long below that close line, that's kind of a target. It's usually much better when you're going long above that line. But anyway, we reached up there, and then by the end of the day, boom, it closes lower. And we end up with a red day that if it follows through lower, that's an actionable signal to the downside, kind of a turnaround Tuesday. You can set up a whole bunch of chain reactions to the downside. And I discussed that failure possibility in the pre-market video. So keep that in mind for tomorrow. Tomorrow can be the real exciting day to start this week to the downside with some follow through in the days ahead. So we'll see if that develops, especially that on Monday we couldn't even reach our first target. But anyway, that was today. So at the worst, it was just a very small loss and you sat out the whole day. Maybe you got long here for a little bit of a bounce trade. Maybe you got short here just to see how it would fill this gap. If it just comes down and doesn't go much, you just can get right out. If you had a big red to green move that started to attack that high again, you could have gotten long again. if you were maybe just getting a little bit of choppiness at the open. But in this case, that down move did kind of follow through lower, and you got the 2 pushes to that target, to the pre-market low. So let's see what happens tomorrow. That's the way I interpret the 15-minute chart, knowing that, the highs and lows typically occur early in the session. You're looking for that first directional move. It just happened to be down today. And then the bounce was just, at that point, you went down too long and too far for it to really take out those highs again, most likely, and you just kind of chopped around for the rest of the day. So we'll see how we go tomorrow, but this could be that reversal signal to the downside. We'll kind of check in pre-market tomorrow.